Welcome to the Daily Business and Finance Show. Disney announces price hikes at Disneyland and Disney World, leading to rise in company stock. Exxon confirms $59.5 billion deal to acquire Pioneer Natural Resources in stock. Microsoft faces IRS notice for $29 billion in back taxes and penalties. ExxonMobil experiences biggest daily drop since March after Pioneer deal. NASDAQ, S&P, Dow ignore producer inflation data to secure gains, CPI remains in focus. Energy Transfer LP raises $4 billion through senior notes for debt refinancing. Detroit auto giants clash with UAW over layoffs amidst ongoing strike update. Bank of America predicts AI's economic impact could reach $15.7 trillion by the end of the decade. Stay tuned after the short ad break to learn more about these top headlines. Walt Disney has recently decided to increase ticket prices at its Disneyland Resort in California and Walt Disney World in Florida. The price hike primarily affects single-day admission to Disneyland on high-demand days, which will see an approximate 9% increase. However, the lowest ticket price will remain unchanged at $104. In addition to this, multi-day passes and other tiers of tickets will also experience price increases ranging from 3.9% to 8.9%. Furthermore, there will be higher costs associated with the Genie Plus program, annual passes, and parking fees. Similarly, in Florida's theme parks operated by Walt Disney Company, annual passes and single-day tickets are also subject to similar price hikes. It is worth noting that last month Disney announced its plans to invest approximately $60 billion over a decade in its parks, experiences, and products division.
ExxonMobil has agreed to acquire Pioneer Natural Resources in a deal worth $59.5 billion. In this transaction, Pioneer shareholders will receive 2.3234 Exxon shares for each Pioneer share they own. This acquisition is anticipated to have a significant impact on Exxon's Permian Basin production volume, doubling it and reaching approximately 2 million barrels of oil equivalent per day by the year 2027. Prior to the market opening, Exxon's stock experienced a decline of 1.8%, while Pioneer's stock saw an increase of 1.1%.
Microsoft has received a notice from the IRS informing them that they owe a total of $28.9 billion in back taxes, interest, and fines for the period spanning from 2004 to 2013. In response, Microsoft intends to challenge these proposed adjustments by pursuing administrative appeals and potentially engaging in judicial proceedings. Although the company does not anticipate reaching a resolution within the next year, it expects minimal impact on its tax implications. As a result of this development, Microsoft shares experienced a slight decline of approximately 0.3% during extended hours trading on Wednesday.
ExxonMobil shares experienced a 4.6% decline on Wednesday, reaching their lowest closing price since August and marking the largest one-day drop since March. This decrease followed the announcement of Exxon's acquisition of Pioneer Natural Resources for $59.5 billion in an all-stock deal. As a result, Exxon shareholders will face approximately a 14% dilution effect. However, the company remains confident in its ability to deliver improved returns to shareholders by leveraging its strong balance sheet and surplus free cash flow from Pioneer. Industry analysts perceive this acquisition as strategically advantageous for Exxon as it fills a gap within their portfolio and demonstrates optimism regarding long-term oil demand and prices. While there is a possibility of an FTC review, experts do not anticipate other buyers competing with Exxon due to the substantial size of the transaction. Moreover, this deal may pave the way for increased consolidation within the oil and gas sector as companies strive for cost reduction and efficiency enhancements.
U.S. stocks closed higher on Wednesday, with the Nasdaq Composite up 0.71% and the S&P 500 up 0.43%. Alphabet and Meta platforms boosted the tech-heavy index, while Novo Nordisk's positive trial results impacted the healthcare sector. Dovish remarks from Federal Reserve speakers helped offset concerns despite hotter-than-expected producer inflation data. Attention now turns to Friday's Consumer Price Index report for further insight into monetary policy direction. Longer-end Treasury yields declined after the PPI data release and a disappointing $35 billion 10-year note auction.
Energy Transfer LP has announced the pricing of a $4 billion senior notes offering in 4 tranches. The offering consists of $1 billion of 6.5% senior notes due 2026, $500 million of 6.100% senior notes due 2028, $1 billion of 6.400% senior notes due 2030, and $1.5 billion of 6.550% senior notes due 2033, all priced close to their face value. The closing date for this offering is scheduled for October 13, 2023. Upon completion, the net proceeds are expected to amount to approximately $3.973 billion. Energy Transfer LP intends to utilize these funds for the purpose of refinancing existing debt as well as general partnership activities. This significant senior notes offering by Energy Transfer LP will enable them to raise substantial capital while addressing their financial obligations and supporting their overall business objectives.
Detroit automakers General Motors, Ford Motor, and Stellantis have recently laid off approximately 4,800 workers at factories that have not been impacted by United Auto Workers strikes. These automakers attribute the layoffs to the strikes, which have caused disruptions in both manufacturing and supplier networks. Conversely, UAW argues that these layoffs are unwarranted and part of a larger campaign to exert pressure. Industry analysts view these job cuts as a consequence of decreased production and anticipate that the strike will persist for several more weeks or even months. The affected factories are situated in Michigan, Ohio, Illinois, Kansas, Indiana, and New York.
Artificial intelligence is projected to have a substantial economic impact of nearly $16 trillion worldwide by 2030, as stated by Bank of America. Notably, companies like NVIDIA, Microsoft, and Google have already reaped the benefits of AI implementation. However, the investment firm believes that AI will extend its influence across all sectors. The integration of AI tools in the coming years is anticipated to enhance efficiency and generate higher revenue for companies on a global scale. This forthcoming wave of AI has the potential to disrupt every sector within the next 5 to 10 years, leading to significant opportunities for growth.
Thank you for joining us on today's episode of the Daily Business and Finance Show. Stay tuned for more insightful discussions on the latest trends shaping the world of business. I'm Montgomery Jones.
And I'm Amalia Dupre. Let's part ways for now, until tomorrow arrives. This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.